How I traded NQ futures today and win rate doesn't matter. If you think your problem in futures trading is your win rate, this video is for you because win rate does not matter. I'm going to break down a real NQ futures trade from today and show you how this trade makes sense even if you lose more than you win. Because most traders, they blow accounts just chasing a high win rate. But consistent traders, they focus on risk, structure, execution. And I'll prove that using a real NQ futures trade step by step. Now, this is not hindsight. This is exactly how I traded NQ today. So you can learn how to think like a trader and not just where to buy and sell randomly. This video is for you if you're learning NQ futures, number one. If you're number two, you're using prop firms. And number three, if you're just stuck trying to fix your win rate instead of the whole process of what's going on. Now, if you're tired of over trading, revenge trading, or blowing evals, this breakdown will help you. Again, this video is educational purpose only, not financial advice. So let me explain why the win rate does not matter before we looked even at the charts, right? Win rate doesn't matter because profitability is a math problem and not an ego problem, guys. If you risk small and your winners are larger than your losers, you can be profitable even with a 40% win rate. But if you size too big and you manage trades emotionally, you can lose money 80% with the 80% win rate, right? So today isn't about being right all the time. It's about executing a plan correctly. Okay. Now, this is the breakdown you see on the screen, right? Of how many trades I took. I took 13 trades today. I had 5 wins, 8 losses, with a 38% win rate, right? I netted about 59 points that allowed me to have a net total of $1,190, about $1,200 I made today, even though I had more losses than wins and I trusted my process, right? So before we go into my actual trade I took, we have to look at market context and what's going on with the market, right? So let's go into the 5 minute time frame on NQ. Let's delete all this and delete this, right? So coming in today, this is market open here at 9:30. Um, Before that, we have all this bullish order flow, right? And pre-market. Asia, we rallied, I'm not rallied, we found a balance in Asia. Once London opened, we rallied higher for about 200 points and then NQ open. So in my eyes, I'm thinking New York open, right? New York Open is going to be range bound because we had a rally. We had an unbalanced market going up pre-market. So let me explain this clearly. We are only trading New York session because of the volume it has. When you want big trend days, when you want candles to move, you want a lot of volume. And that's what I trade. I trade volume footprint candles. And you want volume. So New York session is the best session to trade during that time. So most traders lose because they skip this step. They don't know anything about market context. They just use indicators to buy or sell, or just use trend lines to buy or sell out of nowhere, right? But you got to have reasoning behind your trades. You can't just jump into entries, and you want to know where you're wrong before you even click buy and sell, right? You want to have already a plan in place. So for me, coming into the market, I wanted the market to actually pull back for me to get along. And where would I buy a long here from? So I already know that we are coming into an area where we are going to get a lot of rejection because there's a lot of pivot areas here. There's previous day high here, previous month high, weekly opening, and previous week high over here, right? All this area over here, right? This whole area right here, that is a pivot zone. So the price is going to pivot from there, right? But where are we going to catch a good buy where everyone else is catching a buy? So I already told my Discord that I'm watching VWAP, I'm watching value area low. So when we get to this area right here, value area low and VWAP, they are both confluences. It's a location confluence, right? So VWAP I use every day, and that's just if you're above VWAP, you're longs. If you're below VWAP, shorts. But it's more context than that. You have to look at key levels, right? And this is why levels matter, right? When the price action reaches these levels, you can either reject, you can absorb, or you can have a momentum shift or a continuation. So this isn't a random trade. It's called a location-based trade with defined risk, right? And if it does not continue or reject, then you have an invalidation area where you say, okay, it's not happening. This is wrong. I'm out of the trade, right? So here's the exact execution that I'm going to break down: entry, the stop placement, and the target logic. So, and important to know, I wasn't trying to maximize my win rate, right? I was trying to minimize my downfall when I'm wrong. And position sizing is very important to prop firm traders. You do one oversized trade, and it can end your evaluation or your funded account, right? So let's get into the trade. So I use volume footprint candles, and this is how it looks like, right? On the left side, we have the bid. On the right side, we have the ask. When it's highlighted in red, that means the sellers won in that area. I mean, that price level. When it's highlighted in green, buyers won in that price level. This lime green is called an imbalance, a bullish imbalance, meaning to say that there was more buyers and sellers in that price level. This pink one right here is called a bearish imbalance, meaning to say that there were more sellers than buyers in this market. And then we have the delta, which is the difference between the ask and the bid, meaning to say that the candle, in the whole candle, who was more in control? If it's a negative number, sellers were in control. And if it's a positive number, buyers in control. Then you see the total volume each of the candles. Now, this is the 1 minute candle, right? So we watched it come down into VWAP, right? Once we watch it came back down to VWAP, we have this aggressive bearish imbalance, meaning sellers were willing to buy, were willing to sell at a worse price at the bid here at 835 over here because you see it highlighted. But these sellers got absorbed. How do I know they got absorbed? Because this a price action candle closed above that area. So they were trying so hard to push the price down, they couldn't. They got absorbed, and then the price closed above them. So that's what I call absorption. So that absorption made me enter here longs. So I entered longs right here, right at that point, right? So I've entered longs, right? Now I entered small size because I have three confluences which dictate on how I will size into this trade. I either have absorption, I either have aggression, or I either have delta flip, right? Any of those three will determine my sizing. But here on this candle, I only have absorption. I do not see aggression on the buyers, and I do not see the delta flip, right? It didn't flip from red to green, it just stayed red. So there's more sellers here, but we do have absorption. So I'm coming in here with a small size at first, right? So immediately as I come in, the next candle comes here. We call this stacked bullish imbalances where three or more price levels were controlled by buyers, were extremely controlled by more buyers than sellers. That's what the footprint highlights for you as a box. If you're an ICT trader, we would call that a fair value gap. But in the order flow, volume footprint candles, we call it stacked imbalances. In this case, it's a bullish imbalance. So boom, right off the rip, that this candle was a pivot candle, right? Right off, it had location with VWAP, it had absorption. I didn't go full size. It wasn't an A plus setup. It was just B plus for me. So boom, hit that. This comes in, right? So I already have one position down here. Okay. Now I'm waiting for aggression to show up, right? Because this is a sign of aggression, stacked bullish imbalance, but the numbers are not as aggressive as a normal, a volume of a candle where buyers are just extremely buying it. I want to see 400 and up of aggressiveness when we have these bullish imbalances here. So right here, I get that. I get this absorption. I mean, I get this aggression right here at 467, right? I get this bullish imbalance right here, and I get a delta flip here. So I'm saying, you know what? I'm going full size from here. So good. So I have this one contract here, and I'm going two contracts right here, right? Two contracts right here because I have two confluences, delta flip and aggression. So I'm in now two positions. Now, I forgot to tell you, My stop loss here would have been if we went underneath this absorption area right here. So my stop loss would have been right here under the 830s, right? So 10 point, 11 point stop loss, whatever. It's good. It almost hit it, right? But it exactly went into our absorption area and we pivoted away from that. Boom. So I already have one that's already in profit. Now I'm going in two up here, right? So now where would be my stop, right? My invalidation point would be underneath this candle because if if price action closes underneath this candle, then these buyers failed. Then this aggressive buying failed, right? My stop loss on the two would be right there, right? But I still have this, so I would have had like a small green trade overall. But if this hits our target, which I'm going to show you next what my target is, we're going to be, it's going to be a big trade. It's going to be a big R trade. So what I'm looking for now that I'm in the trade, I'm full size, right? I'm full size in the trade. I'm three minis. Three minis is my full size for now, right? We get this aggression again of 618 bullish imbalance. So there's no sellers that come in here. I don't see the pink marker yet, right? We get um, a lot of some selling here at the 915s up here because we see these pink markers coming in. That means there's more sellers than buyers in those price levels. But what we're reaching for is a level um, that we know that it's going to pivot. That in the past it pivoted before from there and it rejected. So here we're going to target this blue line up here, which is the previous day high. Okay, previous day high up here, right? So this blue line is my target. So what you need to do in this time of trade management is that you just watch the candles as they go by and you read the volume footprint candles, right? Boom, we get some sellers. Also, we get some buyer aggression. So I'm not afraid. Here we got some sellers, but we also have more buyers here. So I'm not afraid. They're fighting over here at this area at 910, 900s. They're fighting, right? So sellers come in here, get absorbed here. This is a bearish imbalance, but the candle closes green. That's called a seller. That's called an absorption right there. Okay, comes in. My stop loss is still right here, right at the 870, at the 870s, around the 870s, 875s. Right. We come down. We almost touched my break even point where I just put my stop loss to break even just in case it pulls back hard. I get out break even. If it shows more aggression and absorption, then I go in. But it does not. We get some selling here and then we push higher. We got 300 bullish imbalance. We get more imbalances here. And finally, we hit our target up here, right? We hit our target for 160 handles. Okay. 160 handles, and that was full size, guys. I did This is my first time going full size for the day. All my losers were small. So from here, if we look back, right, we got it all the way up there. We have two contracts for 40 handles, and then we have one contract for 85 handles, guys. Right? So that erased all those eight losses. It completely erased that with one trade. That's all you need. You need confluences, you need a process, you need trade management, and you get the result on how it went, right? Because I followed my rules, right? I'm not looking at the P&L. I don't care about the P&L. I'm looking at, okay, is the sellers are coming in here aggressively, then I'm going to be out of the trade. And they never did. They never came in aggressively, and we held to previous day high, which is a pivot point, an area where everyone has to look out for. Okay. Um, and I didn't care if my trade was red or green. I managed it well. I didn't look at P&L. I just trusted the process, right? And this is where traders actually improve, right? They actually learn how to manage their trades just by looking at the volume footprint candles and looking at extra data that you don't see with regular candlesticks, right? We're not emotional. We don't trade on hope. We look at the data one by 1 minute candle. We look at the data here for volume footprint candles. Now, the biggest lesson, right? The biggest lesson that I'm going to tell you takeaway that you have to take away from all of this is that win rate doesn't matter, guys. It doesn't make you profitable. Risk management does, okay? Scaling in does, scaling out does, right? If you know how to go big and know how to go small, That's what separates you from a funded trader, from a profitable trader, and just from a loser. You don't need to win more. All those guys, gurus that are talking about win more, win all your trades, win 90%, they winning small base hits, and their stop loss is so far. They have a negative RR. So please, guys, you need to not win more, but you need to lose better, right? When you lose, it has to be small size. It has to be a quick invalidation. You have to be small size because it was not, didn't have all the confluences you want for that trade. And now that mind shift, it separates you from a gambler and a trader, right? You understand process, you understand the risk. Now, if you like this breakdown and this helped you, right? I also have a free Discord. And the free Discord I have, we have over 400 members. And every morning I have, a market analysis, what I'm looking at, what I'm waiting to happen, if I'm taking longs or I'm taking shorts. I give you, the picture of it, and then, you know, I give you the levels to what to look for. I also have my order flow strategy, and we have a lounge where we talk about the day's trades and we break down the trades as well here over here at trade recaps. Now, if you like this, it's free. The link will be in the bio. Also, if you like this video and you like how structured it is, how volume footprint candles, sounds interesting to you, and order flow sounds interesting to you, like the video, subscribe, and like I said, join that free Discord link below. It's free. I post all the education there, all for free, no signals, no hype, just learning how the markets actually move, not just price action candles, the data behind the market. I'll be posting more NQ breakdowns like this in the future and more like prop firm education consistently. So, watch out, follow, guys, trade safe, manage risk, and I'll see you on the next one.